This conference will now be recorded.
Good evening, ladies and gentlemen. This is Clueless A Trading Frank. It's Sunday, 9:07 p.m. on March 21st, 2021. This is our weekend strategic webinar that we broadcast every single week. These sessions are recorded, directly uploaded to the Clueless A Trading channel on YouTube. Within a day or so. I have actually two that I'm that are backlogged that I need to update, and of course this one by tomorrow it will happen. But the link to the recordings are uploaded within 20 to 25 minutes directly on the real-time Twitter feed. That's the most important part right after the session ends. So anyone out there who cannot attend tonight can go ahead and listen to them. Full disclosure, this is purely for financial education and not for any solicitation or advice. So let us begin. So broader points. Nothing really material happened this weekend. As you know, I monitored things very closely. There was a lot of analyst commentary back and forth, and the one that really struck out was Kathy Wood, who's one of the top growth fund managers from ARK Investments, ARK Funds, as you all know. Slapped a $3,000 price target on Tesla, and she has been a bullish on Tesla for a while, and she's made a lot of money on it, even though lately she's been hit, obviously, just like the Nasdaq has. And I'm sure she has her very technical and fundamental reasoning why she believes that, and she has said it before on the different aspects of Tesla's business. And a lot of people, a lot of smart money listens to her, or at least not necessarily agree, but certainly respects her opinions. So putting a $3,000 target on Tesla by 2023, which is 2 years from now, but not that far away, is pretty substantial. That's five times more than where Tesla is today at around $652. So has to be taken into account. There was also a bunch of talk on this war that's going on, and there is a war going on the financial markets, as I've mentioned quite a few times, between the bond market, the bond vigilantes. These are the guys, the bond vigilantes are just a term for hardcore bond traders, who believe that the Federal Reserve is behind the curve. In simple English, they are not quite understanding that rates can go up a lot more than what they think. But the Federal Reserve, Jerome Powell, is standing pat that this spike in the 10-year government bond deal, the 30-year government bond deal, the 2-year government bond deal, which is the main cause why the market has been under pressure, to be honest with you, specifically the NASDAQ and the high growth side, technology side, both techs and biotechs. And there was a lot of talk like whether or not who's going to win. Well, if you look at historically, the Federal Reserve generally has the upper hand because they are the ones who control the money supply on the monetary part of our economy, and the government controls the fiscal part of our economy, which is basically the stimulus and all that stuff. And the Federal Reserve controls the money supply and interest rate movements and things like that. So the war between the bond vigilantes and Jerome Powell continues, and that is what has caused, is the primary reason. It's really as simple as that. That's the primary reason why the market has been under some constant pressure overall, even though it has not totally broken down for sure, and we're going to look at it today on the technical basis. But just so you all understand, that is the thing. And there's a lot of information out there on that, so please feel free to read it on your own time and understand. Okay, so it's not really about whether a company is bad or good. It's just the pressure of a lot of growth fund managers, including ARK funds and many other tech-orientated funds, or funds which have technology stocks in them, both regular technology as well as biotechs, but primarily regular technologies, like the Apples, the Netflixes, that type of company that have come under pressure, and they've been forced to sell part of their holdings. At the same time, one of the things to keep in mind, by the way, this behind you, you're looking at a live chart of the NASDAQ futures, the E-minis. This is what it really looks like. Um, during the day when it's like down 200 points or something like that, it feels like the world's falling apart. But if you look at this, you will certainly appreciate the fact, which I have shown quite a few times, that this red line here is the left shoulder, the left shoulder, right shoulder, right shoulder. So the inverse head and shoulder with the head down here, with the major bottom here at on not last Friday, but 2 Fridays ago. 2 Fridays ago. What was the date? What was the date? The date was the date shows up here, as you know, the 5th of March is a big reference point, and so far the inverse head and shoulder is still intact, and we'll have to wait and see, what shows, what happens this week. No question about it. So that's basically it. Nothing new. Stimulus checks arriving on people's bank accounts. They're going to be people will be receiving them in the mail, and of course that money is going to be spent in the U.S. economy. And overall, it's a positive. There's no question about it. But that's where we are right now. So looking at this chart here, you can clearly see what's going on. Let's dive into the technicals right now. Let's get the highlighter. So here's the technical view, as we call it. These are the shoulders. This is the triple bottom head. Here is your first neckline, this white line here, right there, right there. Here's your second neckline, this one here, this white line, right there. And this is where we are right now. So futures right now are starting off with being down, given the fact that we had a strong the Nasdaq still ended up pretty strong on even though not every stock did on Friday. We were up 99 points. The Nasdaq right now is at 13,215. The regular Nasdaq, the NDX. I'm sorry, the NDX, the composite is 13,215, and the Nasdaq 100 is 12,867. This one correlates with the Nasdaq 100 right there. Okay, just keep that in mind. But the Dow got hammered. It was down 235 points, on Friday. So the pressure is showing up on overseas markets right now as they're opening. They open at 6 p.m. Eastern Standard Time. Well, the Asian markets start opening. The Australian market starts opening. It's different time zones, as we know. So the futures are down 10 on the E-mini S&P futures. The NASDAQ futures are down about 6.5 or 5 points. So they're certainly holding up much better, which is a good sign. And the Dow futures are, which is the YM, and certainly whether you're a more advanced trader or a new trader, certainly follow the futures, very important. The Dow futures are right now down 102 points. Okay, so that's where we are right now. Dow being, from a numerical standpoint, the highest number. The Dow Jones is up there in the 32,627 level. The NASDAQ is in that 13,000 level. The Russell 2000 is 2288. That was also ended green on Friday. So keep in mind that when I mentioned these numbers to you, that the Dow is down at 102 on a percentage basis, that's very, very minimal because it's at 32,000, almost at 33,000 mark, numerically speaking. So I'm sure you guys understand that. Okay, so that's where we are. Okay. Now let's try to read the tea leaves. Very difficult to do these days, lately I should say, to be honest with you. It's been a very frustrating market, and one of the things that I was discussing with one of my more active and tactical traders is who actually ended up green on Friday. So what was the magic formula? Well, there is no magic formula, but one of the things is that when things get quite volatile and you get that choppy thing, and keep in mind that Friday was monthly options expiration. It didn't pan out to be a positive move. Okay. I guess, it happens, once in a blue moon, because it's certainly most of the times you generally have a positive push towards the first part of Friday, but it didn't really work out that way this time because of the reasons that I explained before. So I said, how you doing? He goes, basically, number one is more cash on the sidelines. Number two is he's more active on the positions, so he's doing intraday scalps. Okay, which if you are fast enough, you can certainly do it to get some nice money in your pocket during the day. And he's keeping position sizes very small, and also the number of positions very, very selective. So that's pretty much how what we have to do, which I've mentioned before, going forward. Now, saying all that, I can certainly, one thing I do know, as the month end is approaching, this is going to be the run towards the end of the month, end of the first quarter of 2021, as I've mentioned quite a few times before. Keep in mind that you're going to see a lot of weird things going on, and weird doesn't mean bad. I mean, it could be a positive surprise, and given the fact that we are pretty substantially oversold on many different fronts, individual stocks as well as the overall indices, I can assure you that that thing is going to happen. There's going to be some big moves, okay, up, and I think the probability of a push higher is that probability is higher, the chance is higher than a very big push lower, because we are already quite exhausted on the downside, specifically on the NASDAQ. Okay, specifically on the NASDAQ. So just keep that in mind. So this is what we are looking at from a technical standpoint. If you look at the internals actually look pretty damn good. The internals are not supporting this type of choppiness, to be honest with you. So that's from a technical standpoint, we call that a positive divergence. You can see here how the lines have crossed. Quite easy to see. MACD is nicely green. This is a 1 hour chart. This is more for swing traders, and it looks pretty good. Let's take a look at the McClellan oscillator, and we're going to look at the other McClellan oscillator towards the end of the session, the NYMO. So this is also the McClellan oscillator, New York Stock Exchange McClellan oscillator on a more real-time basis, and you can see here that's also heading up, even though we're kind of doing the sideways chop dance of the inverse head and shoulder shoulder supports. There we are, right there. So it's looking pretty good. Let's take a look at the stochastics. That's the overbought, oversold conditions. And we got overbought, and now we're pretty much still hanging up there. So nothing really scary about this picture either, even though it's on the slightly more on the overbought side. And that's where we are. Volume, that's another thing that we have to also look at. In the old days, price and volume were the key indicators for everything, but nowadays, because of the confluence of these robotic, algorithmic high frequency trading black box programs, things get a lot skewed. There's a lot more players in the market. There's a lot more, exchange traded funds, which are closing out positions, buying positions, specifically at the end of the day. There's a lot more variables involved. But look at the volume here. We had a big sell-off at time-wise at 8 a.m. on Friday. Look at the volume right there, that big spike. And throughout the day, if I zoom in, let me just zoom in. And throughout the day, we had a big buy program right when the market started around 10 o'clock, and then it kind of died down. And also keep in mind that it was monthly options expiration, as I was saying earlier, on Friday, and we also had quad witching. Please look that term up, quadruple witching, on Investopedia. there's a whole bunch of different asset classes are expiring options at that time, and that's why you have a very sharp move up in volume, not as big as this, which was on the sell side. That was at 3 p.m. And I did mention that on my Twitter feed, as you all read. There's really not much to say on Friday. That between 3 and 4, you get that spike in volume. A lot of positions being adjusted. Okay, options expiring on multiple fronts, both stocks and indices. So right there, you got that. See that volume? Okay, good. All right, so we don't want to hammer this thing to death. Let's take a look at the same picture on this NASDAQ on the Qs. So let's pull up the Qs. And one of the things I like to remind all my members, and I've always done this for years, is that when things get really choppy and it feels like the pressure, it just can't really get up there and move, we can't do anything about it. You know, it's frustrating. It's very frustrating for me because I always want to help people make money. I always want to make money, but it doesn't really work that way. You know what I'm saying? So one of the things that I do tell people is use those days as learning experiences. Look at the charts, you know, both the intraday charts, slightly longer term charts, and use them as educational tools on those days, because nothing is a greater teacher in investing, both in stocks and options, than Mr. Market. Okay, that's just the way it goes. So let's see here. So that's what I say. Certainly use the market as a major educational tool, especially on certain days when things are kind of moving sideways. There's really nothing moving, and you know, it's down on the P&L. You know, don't push things. You know, buy some selective things if you want, like I did. But that's basically it. All right, let's take a cue. This is your NASDAQ. So this is the same picture, much easier to read. Okay, this is what it looks like. As you can see here, this red line is the red line that I just showed you on the inverse head and shoulder. So let me change the color right there. So you got the left shoulder, left shoulder. So this is a major support here. Left shoulder, left shoulder. That's exactly where it bounced off that on Friday, right there. You can see that. And you can certainly see based on the stows that we are certainly oh, this is the head. So that's the IHS, inverse head and shoulder, IHS. Right there, oversold and starting to creep up. Okay, but because of the choppiness, this creep up can certainly all of a sudden just go like this. So like I said, it's mixed signals. Okay, mixed signals. So here we are. So it looks like the market right now is trading in a range, as I mentioned before, between 310 on the NASDAQ, QQQ, 310 and 324. 324 on the upper end. There you go. And this is the range that we're trading in, 310.24. And that's a pretty wide range, ladies and gentlemen. This was the fake out, the ambush right after the Fed came in, strong press conference, said everything that, you know, very strongly, very firmly. Fed Chairman Powell, both the announcement from the FOMC, which is the Federal Open Market Committee, as well as his press conference, market just went boom. You know, we took some very nice profits, had some positions still going. And I did put that through also on the real-time Twitter feed, take partial or full profits on a big move like that. And then here's the fake out right there. Okay, so at this point, keeping it real simple, it looks like a very definitive, very similar pattern. See, like that, like that. And here is where the fight comes in. If this support breaks, I certainly, if this support breaks at around the 310 level or 310 and a half, whatever you call it, you can certainly see it on your screen. It seems logical to put out a few shorts on the QQQs. Certainly does. Certainly does. But you have to be quick because the market could just break this, fall right here. Remember, this is a downtrend line, fall here very quickly, and then all of a sudden go like that. All of a sudden bounce. So, and you'll be just, man, I just got in right at that breakdown level, and then all of a sudden the algos go the other way, and you're down on your money. But if we get a definitive break, and the definitive sometimes members ask me, the DM me and say, what is a definitive break? A definitive break is a fat red candle. Okay, it's a fat red candle. So if we get a fat red candle broken like this below that 310.76, 310.50 level, then you need to act on it very, very quickly. Okay, that's a definitive break. And that opens up this, see this red box here? Well, we can extend it. We can certainly extend it. That's a gap fill. That's a old gap fill from a couple of days ago. So all of a sudden the market will come down and hit this gap, and that gap is 307. So if you're an active trader, you can actually make some pretty decent money. But I'll tell you from personal experience, if you put in too much, it's really scary shorting also, because these algos know that everybody's looking at the same level and they're all going in at that level, and they'll just they'll basically, throw you into a loop and throw a curveball and run the market higher. But that's what, generally speaking, this is, I mean, technically speaking, this is where we would come down to. Is it possible we come down and retest that 300 level on the Qs? Well, that would be a phenomenal return on the money if on the short side, no question about it. But given one of the things that you have to look for, and this is what our friend Dom, who's done quite well. He was on our Thursday webinar. He was the gentleman who was still green on Friday. Said that he looks at the Qs, he looks at the VIX, the VIX volatility index, and then of course he's looking at he's basically looking at those two things, and then deciding whether or not to go in on a short trade. So we'll have to look at that, because the stochastics also, if they're trading higher and the markets are coming down, that means it's a false breakdown. It's a false breakdown. The same thing applies with stocks. Okay. But saying all that, if you really don't want to, really like scratch your head and try to be a very nimble trader, just sit back. Just sit back. Let the market develop on its own. And that's the reason, just so you all know, I'm going to be switching over to the E-mini S&P charts. That's the reason a lot of the times I say in the morning that real-time alerts will resume in a few hours or will be delayed, because there's no point in just putting out things out there when, at least from my professional standpoint, I don't want to put money at risk. Okay, yeah, you might nibble. You have a position, it's down, it's falling, getting off support. Fine, maybe buy a little bit more. But in times like that, one of the terms that I use is let the market settle. Okay, let the market settle. So that's the reason why I put that. So you don't have to be a daily trader. You don't. Even though you might miss out on a big move, because this market's full of surprises, I'll tell you, full of surprises. And we just had a massive buyout. This Canadian Pacific, the big railroad company, they just bought Cancer Southern. I believe that's KSS. It's not a stock that we trade. Cancer Southern, and the stock is up 24% right now. So that's a big move. So if a merger is starting on the transportation side, on the industrial railroad side, which is the transportation index, the Dow Jones Transportation Index, DJT, then things are brewing. Maybe some other companies are looking at companies saying, man, you're down like 30% or 20% or 15%. Maybe I should look to buying you. So there's going to be a lot. I believe that as we move forward, you're going to see quite a few buyouts on many different sectors. I do believe that, because prices have come down to levels where some of the bigger companies are looking to acquisition. Imagine Warren Buffett comes out and decides to buy a company. I wouldn't be surprised, because they're flush with cash, right? And he always looks for opportunities when things come down. So just be ready for that. So this is your picture of the S&P 500 E-mini futures, which are down about 9 points right now. This is where we are. Again, Lots of inverse head and shoulders. This is the support level that I am monitoring very closely, which is approximately around 38.57. Not too far away from where we are, roughly about 100 Dow points or so, another 100 Dow points or so. But this is what it looks like. This is what it looks like. So it's not, like I said, if this breaks again around the 38.58, 38.55 level on the on the S&P 500, which closed at around 39.13, then again, you can attempt to go short. Or you might want to go short from here towards these levels too, using these charts. We have a few traders who are E-mini traders. They love my charts because they trade off these things. They're obviously faster traders and they can trade overnight. They can trade 24/7. So that's a different story. But this is what it looks like. Now the same chart, if we look at it from a more longer term perspective, i.e. daily, let's see whether or not it's Armageddon or whether it's just doing this. So this is where we are. This is where we are on the daily chart, okay? Now, one of the things I also do for people who have mobile phones, I use it on my iPhone. I go to investing.com and I look at the daily, hourly, weekly, and monthly charts just like that. Like they're not all drawn like this. They're just simple candles. You just have to drop down box and just put Bollinger Bands and stochastics. Okay, try it. You start to get a much, it's sometimes when you look at things simply, it really doesn't look that bad. So here we are, where we are right now. Here's your 50-day moving average, which is very close, and also the breakdown level. That's your green line. I'm sorry, the breakout level. This green line here, right? We had multiple breakouts. And this one comes into play close to the 50-day moving average, close to, look what we're doing. And machines do this all the time. Remember, this is a downtrend line. And it's about to test the downtrend line, give or take a few points. So a lot of the times it'll test the downtrend line, slip a little bit, test the breakout level, maybe test the 50-day moving average, which is around 38.62, where we are right now. We're at 38.89. So we're roughly about 20 points, 20, 25. So like 100 points or so on the Dow. So we're getting close. We're getting close. Now, we can see here that we are, because of the pressure on the market, on the 18th, on the 19th, which was Friday, and then of course today, that a bullish play would be that, okay, it's still a bull flag and all that good stuff. Here's your 50-day moving average, which acts as major support, breakout level, all that stuff. Simple English. We're certainly, this is certainly telling us that the pressure is on the downside. No question about it. But the but is that if you go in really hard on the short side and the market quickly retests these levels and then bounces hard, okay, does this, then you're going to be screwed. Okay, you're gonna get hurt. So it could do this very quickly and then bounce, get back over this into this rising wedge. So what we are having right now is a pullback within the rising wedge, and from, if you just look at this part, it still looks like a bull flag. It still looks like a bull flag. So just keep that in mind. We could suddenly go like this. All right, because this one is, even though it's kind of pointing down, the percentage K line is still pointing up. So these are very minute technical details, but I'm just sharing this with you because, we are primarily a technical service. So just showing that to you. So this is your daily picture. This is more of a zoomed out picture of what's going on. So this week is going to be very important. It's not going to determine what happens for April, but we're focusing on the near term technicals of what the markets are doing rather than trying to zoom out one step at a time. One step at a time. Let's take a look at the good old VIX. I'm going to drag it in from my other screen. And then we're going to look at stocks. There we go. Okay, this is your daily chart of the volatility index going back to. Bear with me 1 second. Going back to August. That's a long time ago. September. The big peaks, right? This big when the VIX spikes like that. Those are the big flash crashes. So we got oversold, no question about it. And we bounced off from that oversold level. But we still seem to be getting, even though the fact that the Dow was down 230 points, you still got a red doji, a red candle coming off these lines that are moving sideways. These are the 3450 and the 20-day moving averages. If somebody looks at it internally, it certainly is suggesting, mind you, it certainly is suggesting that it wants to move higher, the stochastic. That means the VIX still wants to move higher. But the question is how much higher? Because you can get up to these levels and then bang, get slapped down. So this VIX is a kind of a mixed signal on the daily. It's telling us, and this is all a consequence, just so you understand, this is kind of a little bit more of the intellectual understanding of the market. This is all a consequence of the war between the bond guys, the bond vigilantes, the bond warriors, and the Federal Reserve, the 10-year government bond going higher to 1.73%, and the pressure on the markets. Nothing else. Okay, this is the consequence of that. So if somebody was really bearish and wanted to really short the market hard, let's say they came in and shorted the market hard when the VIX was here, they lost money again on Friday. So we're watching this very closely. Now the same VIX, if you look at it on the hourly, and before I go any further, everything kind of making sense because I'm just like giving you a full-scale, simple tutorial on how to read the tea leaves on the market without, without complicating things. Everyone understanding what I'm talking about?
Yes.
Yep.
Okay, good. So this is what the hourly chart looks like. This is what the drama, the intraday drama looks like. So the intraday drama was that the VIX was falling very nicely till 12 p.m., right? Till 12 p.m. See that? Broke out of the upper Bollinger, out of the cloud. Once you go out of the cloud, you go back into the cloud. Okay, that's the way it goes. And then at around 1 p.m., and that's a function of the quadruple witching, okay, you started to move up. So at this point, they're still trending higher. So that means there probably will be a move higher. In other words, the market will probably open lower just by looking at this. But the question is, will the VIX break out towards, let's zoom out. This is what the VIX did on the spike side. 1 second. Right there. This was back on beginning of the month, on the 4th of March. This is where the market bottomed when the VIX went like this. Remember, I said it's going to come into the Bollinger. It's an 80% probability. It always happens, and it did. And the VIX collapsed, and the markets went the other way, higher. Okay. So right now we're in this kind of zone here, which is still a downtrend line. If you want to look at it this way, right there, we're still within the downtrend line. However, these minor moves up will cause red numbers to appear in your screen and the market under pressure. Now, if this downtrend line breaks out, and this is what one has to be careful about, by the time the VIX goes up towards, let's say 22 or 20, let's say 22 and change, that's what it shows here, close to 23, these will be severely overbought. That is what's difficult to read. Is it going to break out after that? And those are the levels I showed you on the charts. You can go ahead and establish a short position, but again, you have to get a keen eye on it. Is the VIX, pen color never stays at one color. Okay, let's say the VIX does this, then pulls back a little bit, and then bang, shoots higher to 24. Remember, these are all levels where the VIX has sold off. Okay, so if the VIX just takes for whatever reason, in this particular case, interest rates moving higher, some comment that the market doesn't like, whatever the case may be, if the VIX does this, then obviously you'll be in a good position to make some money on the short side. One of the things that you all can do, and I'll certainly do, is have a continuous hedge. In other words, have a small amount of money on the short side while this game is being played in the market between interest rates, between the bond vigilantes and the Fed, the pressure on the NASDAQ, and such and such. So you can have a small hedge. Okay, S&P puts are pretty cheap. You can buy them out of the money just in case we get another big drop. You can buy some QQQ puts. So this way, your long side, which you certainly need to have much smaller positions at this point, which I've mentioned before, and I'll stick by it. Okay, even though your position on the long side will be down, you're going to make some nice money. Now, you won't really make money if it just falls 50, Dow falls 50, 60 points. You need 100, 200 point type of drop in order to deliver some cash in your pockets on the short side. So the SPY, the QQQ puts, there are many other asset classes you can use to short the market on the downside, but I just keep it simple. Okay, SPY puts, QQQ puts, just in case you start to see the VIX moving sharply higher or the market consistently under pressure. S&P futures right now in the Globex markets are down about 8 points. So there's nothing dramatic happening on that side. Okay, and the NASDAQ futures seem to be stable. They're up about 11 points. So that's it. So I don't want to, like I said, sometimes I just want to clear my brain out too while I'm explaining things to you all, and that's pretty much it. So let's look at a couple of stocks. Some stocks have been been hit quite hard. Nothing to see here. We explained that. Oh, let's take a look at the Dow Jones. 1 second. Let's take a look at the, I know I have it preset so I can easily pull it up. Just a little bit here, ladies and gentlemen. So here's a picture of the Dow Jones Industrial Average. Okay, this is where we are. Remember, the Dow outperformed the NASDAQ very strongly early part of the week. This is where we are right now. So if I want to move it up a little bit, this is what it looks like. So there's really nothing dramatic going on, to be honest with you. Okay, there's really nothing dramatic going on. If I want to draw another channel, these parallel channels, so a little bit lower, but it's still on a, believe it or not, it's still on an uptrend. The Dow Jones has certainly been on an uptrend because some of the bigger companies. And tomorrow, I wouldn't be surprised if the Dow gets a kick in the butt on the upside at one point because of this massive buyout news of Kansas Southern Railroad by Canadian Pacific, because that's big news. That's big news. Okay, so this goes back to the month of February. Just wanted to give you a visual picture, and this is what it looks like. This is what it looks like. So nothing really like earth-shattering. The last time we had, let me get a drawing tool here. Let me get the color, which keeps on disappearing. We had a nice sharp move down here at the end of February. We had one on March 3rd to 5th, right? There we go. So this is simple pattern recognition. Nothing complicated, but you can simply see here that if we get one of these moves as we're undergoing right now, they all fall, they have the same structure. They have the same retracement structure as this one going on right now. Okay, and what happens after that? You gotta move higher. You gotta move higher. This one got to move higher, then did it again. So let's say this one gets a move higher and does it again. We'll see. We'll see. Okay. And then once it did that, it created a big fat money-making opportunity known as a W pattern or dragon bullish. Is it possible that we do that? We move up, then we move down, and then we move up again. So, like I said, we don't control the markets. This is pattern recognition. It happens a lot. It happens a lot. And I kind of have a weird, I have a gut feeling that this is what's going to happen in the coming days, going towards the end of the month. Now, what's the somebody asked me, like, what's the way to play it? Well, you play it through the SPYs, because this is Dow Jones, right? So you need to get something similar to the Dow Jones, so the SPY, or you can play the DIA, the diamond. You can buy the DIA straight out, or you can buy options on the DIA. Okay, the diamonds, Dow Jones diamonds. So basically, this is the ETF for the Dow Jones, the DIA, and you can certainly make money of these type of moves by trading the DIA. So I haven't actually traded it recently, but I'm going to actually get into it. I'm going to get into it. And I'm going to be looking for opportunities on the upside, given the fact that we are now closer to the lower end of this uptrending channel. They're not expensive and they move, which means you make money. So certainly try it. Like I said, we're all, sometimes when you want to try something new, just put a little bit in there, buy one, and let it go. And if it works, boom, you've got a nice 60, 70, 80, 100% on your money on these type of reflex bounces. So DIA, the DIA. All right, let's talk stocks here. One of our biggest winners on Friday was DraftKings. This stock has certainly been on fire. It has certainly been volatile, but it is seasonally a very attractive stock. March Madness, whether it's, other sports arenas which are opening up, it is certainly in a sweet spot. Let's not, let's accept that for a fact, okay? Economy is opening up, and DraftKings charts certainly. This is your 1 hour chart, looks absolutely fantastic. Okay, these calls that I've been asking people to buy since the 60s, since the 50s, even on a short-term basis, told you guys to buy the 60 calls, 65 calls, 70 calls. They were up in excess of 115, 120, 130% on a crappy day in the market. So think about that for a minute, all right? So I like this one a lot. This is a very bullish chart. I will draw, you can see here that this is whichever way you slice it or dice it, this is a bullish chart. Whichever way you slice it or dice it, okay? This pattern here is an ascending triangle right there. One arm of the triangle, top, the second top, 74 the high. These are the uptrending channels. I mean, this stock could go to 80 or 90 bucks like very quickly. Okay? So the key is that people who are not trading DraftKings, they're actually losing money by not making money. Let's just put it this way. This is a very bullish chart, unless there is some major like mishap on their sports betting side. New York's looking to open up in a big way. Every internal, everything looks very, very, very good. Very good. Looks very good. All right. So I'm just going to adjust one thing here. So I would, again, I have been consistently recommending this. I did very well on it. The calls literally 150, 160% in some cases. All right. For example, I told people to buy the 70 calls, 72 calls. They went from $1.30 to $3.15. And even by the end of the day, they were $2.60. Look, anybody can afford calls of that in that price range. So depending on the size that you get a bang for your money. So I like this one a lot. Come on, 1 second here. I just need to adjust one. The other one with DraftKings, which I haven't really been trading, it's more expensive, but similar to it. Can somebody tell me which one that is? I'm sure you guys, a lot of them are big sports guys. So can you?
Pen.
Yes, Penn. Who said that? Miro?
Vic.
Oh, Vic. Yeah. Penn Gaming. So Penn Gaming is a $116 stock. I like DraftKings, but let's look at Penn. Notice the difference here. Penn had a pretty sharp sell-off from 142 to 117. So this one also is a pretty good buy, but the internals on Penn look very different than DraftKings. They're actually all pointing down. In the case of DraftKings, all these things are all pointing up. In the case of Penn, there seems to be some selling pressure because it shot up more. It's really as simple as that. I just find DraftKings to be the smaller, more aggressive player in the business, as far as I know, and it's pretty good. But Penn looks like it came and tested its 50-day moving average. The calls are not that cheap, but it also moves higher, means the numerical movements are higher. So it can easily go up to, in my opinion, 123 bucks or so. I still like DraftKings. Okay, let's keep it at that. Now, a stock that was the other one that I like, which you all know, is QuantumScape, right? This is a derivative play on Tesla, meaning that lithium-ion technology, EV, electrical vehicle. This is a very good-looking chart. You need patience. We have done very well with this. And this stock also has been holding out fantastically in this very choppy NASDAQ market. Okay, and Adam Jonas, who is the finest, probably one of the few very smart analysts on Wall Street, specifically on the electrical vehicle side, very bullish, not very bullish like Kathy Wood, like 3,000 price target on Tesla, but when he talks about, but also also quite bullish on Tesla and certain individual EV companies and battery companies, likes the stock a lot. Okay, read up on this company. CEO is Jagdeep Singh. He's a terrific gentleman. You don't see him much. Comes in. I've probably seen his interview once on CNBC. Man of few words. These guys are geniuses. Okay, what they're doing. Apparently, QuantumScape. It's all public news. Has multi-layer lithium-ion formations, and if that is fully developed, manufactured, then they're basically going to be the Tesla of the electrical battery or lithium-ion battery world. Like they leapfrog QuantumScape, literally quantum out there in space. So I like this stock a lot. Okay, it's very nice. All technicals are good. Options are not that expensive, and this is a swing trade. You can day trade it when it jumps up. You can certainly do that, but don't try to day trade it like intraday. Okay, unless it opens down a lot, then you can go in and buy it, and then it goes higher. I'll give you an example. It went down to $1.60 on Friday when the markets opened from 225. These were the 65 calls I've been asking people to get the April 1st. You can get into April 16th. You can move up to May, whatever you want. I'm keeping it kind of like close to the vest. So they opened up at $1.60 when the markets opened down hard and went up to 3. So right there is a 100% range on these options, and they closed at 225. So these are the 65 calls. So this is a good looking chart. You got a big gap fill here, one with the other, it's going to kiss it. It almost went there on the 18th of February on that big run up, which was beautiful. I remember from it went up from like 44 bucks, all the way up to 72. That's when Adam Jonas came in and also upgraded the stock, just so you know. So we got an extra push. Call it lucky, call it whatever. So here, when the markets collapsed, the stock was 37, went up to 65. That's 30 points, guys, on a stock that but there's never really mentioned. Please take advantage of this type of company. While I have this on the chart, A, B, and B, still like it a lot. Still a reopening play. Still think their numbers are going to be fantastic. However, this is a big cap NASDAQ stock. so it will be held hostage to movements in the NASDAQ. Okay, so how do the options move? Well, they move in a range of 60 to 70% on a volatile day. How about that? Okay, so this is what the chart looks like. The short-term stochastics, that stock. Okay, this is the F stock, fast stochastics. It's almost oversold. The slow stochastics are overbought, but not really overbought. This is truly a reopening play, right? Obviously, with economy opening and stuff, people are dying to. I read a fantastic article this weekend. Can't remember where, one of the publications, how Airbnb is going to be one of the biggest beneficiaries of the economy. I mean, the U.S. economy reopening. People are dying to go out and rent a place somewhere and get the heck out of their town. All right. So Airbnb comes into place. So good looking chart, very clearly an inverse head and shoulder. Again, one of the things I've learned as a trader, I think all of you would agree with me on this. I'm sure you guys, we're constantly learning. Remember, we're constant students of the market. We have to adapt to the market. We can't sit there and say what worked before will work now. We always have to adapt. You don't have to adapt every 5 minutes, but we have to adapt during, for certain times. So one of the things you'll agree with me is you don't need to have like 30 different stocks to look at. Like 3, 4 of them selectively make you a lot of money. The goal is to make money. It doesn't matter like how many stocks we're looking at. So that's why I keep on repeating some of the ones that constantly I've noticed are holding up or making us a little bit of money or a lot of money at certain times. So that's why you hear the same names again. Okay, I don't want to like cram my brain. Okay, I'm not that smart. Okay, I'm actually not smart at all. That's why I'm clueless. And the fact is, like, I don't want to cram my brain with 30 different new names and get to know them when I can selectively make money or handle the positions, manage the positions right in difficult markets on certain stocks. Really, just keep it simple. Now, you might have a certain few companies that you also know very well. Well, certainly stick to them too. So that's why I'm not like throwing out like 30 different names. All right, it's very easy to do that. The market is full of stocks. It's a market of stocks, not just a stock market. I mean, it's a stock market, not a it's a market of stocks. Okay, with the frigate, start getting stupid. Okay, so here we have left shoulder, right shoulder, the ultimate head. Okay, inverse head and shoulder play going on here. Here's the shoulder that is right now major support. That's approximately 188. 188. I repeat. Okay, any quick drop below that. Now this one moves like 5, 6, 7, 10 bucks during the day. This one you can day trade too. This one you can day trade. Okay, so you got the right shoulder and then a push up. It moves in increments of, like I said, $5 to $10, $5 to $10, and that's reasonable money on the options. And I still think that it's going to literally break out over this new range when things stabilize on the NASDAQ, and hopefully it'll happen sooner than later. S&P futures right now, ladies and gentlemen, are almost going green. You can see there's a lot of activity going on in the global markets as we sit here and talk about things. Okay, Square is another one of my favorites. Square is also kind of held hostage. Can somebody aside from the NASDAQ and the market, can somebody tell me what Square also, what it
Bitcoin,
trades off? Huh?
BTC.
Exactly, Bitcoin. There you go. Okay. So basically, the days Bitcoin's going to be down, let's say 5%, and Bitcoin's like up and down 5% like almost every other day, then Square will get some pressure. But overall, still a damn good looking chart. Here is this should be actually be in white. There we go. Right shoulder, left shoulder. It's a very technical stock, okay? So basically the 220 level, let's see what the price is here. 220 level, 221, 220, maybe a little slip is your support. So if you're looking to range trade, this is a range trading stock. till their earnings come up, which I think are going to be very strong. Now, Square has one other danger too. There are analysts out there who either love Square or they love PayPal. So all of a sudden, for no reason, they'll put a downgrade on Square. Like this company came out the other day, not that it mattered, called Redburn. I'd never heard of them. They said, we're downgrading Square to a sell. I'm like, what? You could check first thing in the morning. I check all the news. I said, what? It's Square to a sell? Doesn't make any sense. Really didn't do much other than the stock actually went down, not because of them, because the Nasdaq was down, because the 10-year government bond yield was, going through the roof. By the way, we'll look at the chart, in a few minutes. So Square is held. That is one risk to Square, and pretty much any company out there, is that the bigger the companies are, you have these analysts, coming in and putting out bullshit, sell recommendations, or we're neutral on Square or something like that, and they're upgrading PayPal. Whichever the case, I like the company. They have a lot of stuff going on, and there's a lot of great news about to come out of Square going forward. So looking at this here, it's very easy to read the thing. 250 is your upper range. There is a gap fill here at 265, but unless the Nasdaq stabilizes, we aren't going to 265. So you can trade this for a couple of points, 5, 6, 7 points. Now here's the thing: if you're a trader on Square, let's say you bought some Square calls the day before on my suggestion, or you liked it and you went and bought it because it pulled back. The minute the stock opens up, within the first, I've seen this happen all the time. I'm not going to tell you exactly what to do, but within the first 5 minutes, if you try to sell those options, they'll give you the worst possible price ever. Let's say you paid $3 for it, $4 for it, and the stock is up $5, $6. And you try to sell it, let's say sell the calls at like $6, 50% higher, right? Because that's what you're seeing on the screen. They will give you the worst possible price. They'll probably give you $4.50 or $5. There's so much activity first thing in the morning, because Square is a very liquid stock, and the algos and the hedge funds that are into the stock big time. But then after 10, 15 minutes, boom, they run it. And you're like, man, they took it away from me at $5, and then it goes to $7, $8. Believe me. So be careful. Trying to sell it in the first 5 minutes can be a deadly situation. So watch the 15-minute chart on the stock while you're trying to sell your calls. Very, very important, because there's a lot of premium decay right there, because everybody's trying to sell it in the first 5 minutes. That's part of the logistics of options trading. I've seen this happen with Square. I've seen it happen with Airbnb. It's turn around and run. So anyway, from its stock standpoint, the stock could go up to 247 once the Nasdaq stabilizes, and this thing just goes. So these are good buy points. Let's just put it this way: good buy points. If it breaks down, then we have a gap fill here at 210. That's a buy point. But otherwise, this is a pretty damn good buy point where the stock is right now, which is between 220 and 222. Okay, very oversold. All stuff is fine. Okay, next. New stock that I put out there, made money on it, on the common, and a little bit on the options too, because I was testing out the options but didn't suggest options. I mentioned the common. Anyone remember what stock that was from last week? And it moved up pretty strongly.
Butterfly.
Anyone remember? Huh?
Butterfly.
Roblox. Yeah, Butterfly is a long-term hold for me. Okay, I'm okay with Butterfly. Yeah, I mentioned Butterfly too. Roblox, RBLX. Okay, let me see where the Roblox is. If it's not there, I know it's on my other screen. This is Fubo. This is another stock that one can really, this is a serious company growing fast. Not a bad looking chart. See that? Even though it got hammered because of the Nasdaq. This is Fubo, the streaming company. This company, Blink, is coming up with earnings. I'm going to be a buyer into earnings this week. This is Blink. I'll show you Roblox in a sec. Roblox is the kids' robotic company. Okay, I explained it very clearly in the serious company. This is a very good looking chart, actually. Look at that. I haven't traded it in a couple of weeks. We've done very well on this stock, by the way, Blink. If you remember, we were buyers of Blink when it was a $8, $10, $12 stock. Earnings are coming out. Blink supercharging. Gotta have those supercharging stations. Otherwise, electric vehicles are going to die on the highway. Right, there you go. Blink looks pretty good. GME's coming up with earnings this week too. If somebody wants to play it, forget those options. Those options are freaking expensive. You get a third mortgage in your house to pay for them. It's crazy. Buy a few shares. Buy a few shares. If GameStop's earnings are pretty good, they'll run this stock to 300. You'll double on your money. Few shares, let it go. If you want to buy the options, feel free to do so. But I look at those premiums, I'm like, what? They're like $50, $60, $70. I ain't paying $7,000 for one call. It's crazy, crazy. Let me just pull it up. I thought I had Roblox here. What? RBLX. Now the reason it looks like this because it just came public. Just came public recently, beginning of March. Let's look at the hourly chart. It's like a little artwork, right? So Roblox, we have traded this stock on a 15-minute basis. On a shorter term basis. Told you guys to buy it around this level, 70 level, I remember, and the stock went to $80. So this is how we play it. It's actually a very easy play. And now they've introduced options. You can buy those options. $5, $10 out, maybe $5 out. Why? Because the stock generally has a trading range of $5 to $10. Really as simple as that. This is a unique company. No one does what they do. So they have the first mover advantage in their field. Let's just put it that way. Okay? And first mover advantages matter a lot. Let's draw this out. This is a very easy technical chart to draw. There we go. Okay. So here we are. See what I'm drawing these things? They're just falling into place. I love charts like this. They're just falling into place. Points that I want to touch, like right here, right? Right there, the little slippage below that. And that's it. That's obviously, as you all know by now, that's a falling wedge. So I sometimes put it this color just so it shows out more. Look at the falling wedge, right? This was when the market 18th was Thursday, right? I bought the stock at 67. I rode it all the way up on Friday to $73. How sweet is that? How sweet is that? Okay, 11:45 a.m. By 12 noon, the pressure came into the market and the stock pulled back like that. Still looking good. Still looking good. But between 3:45 on Thursday afternoon, buying it at this level, you could have sold it the next day for $8, $9 higher. And the options gave you a nice 45 to 50% return on your money. So there we go. So this is a very similar to this. I'll just show it to you. Pen, color. This is all a pure technical play. This, ladies and gentlemen, is an inverse head and shoulder. Left shoulder, right shoulder. Neckline, breakout. This chart can really, this is like a picture perfect technical trade. Okay, breakout. Here it gets choppy. You got a double top, a head and shoulder. Neckline, breakdown. Nice breakdown all the way to 65. That's when the NASDAQ really collapsed, okay? Right now, neckline, left shoulder, right shoulder, next neckline, 73. Stock, so you get like $3, $4, $5 on this stock. So I like Roblox a lot. This is beautiful, oversold, and coming up. Great candidate. Put this on your radar. Okay, I've said enough. So why don't you guys go ahead and ask me to, look at something if you'd like, and I'd be more than happy to do that for you all.
Hey Frank,
Yes,
do
go ahead,
you
Vic.
do technicals chart or pattern on Bitcoin?
I know you're going to ask me that. I have before, and I actually intend to do it again.
Okay.
But the thing is
I had
that
Mara. I had
let me.
Mara, but I sold it. Yeah.
So you made some good money on it, right?
Yeah, I did. I purchased in 30 and then sold 43. But I'm looking to see if I can get in like below
Beautiful.
35.
Now, fantastic. Now let me ask you a question here. You should also try trading Ethereum, ETH,
ETHC.
Ether. Oh
Yeah.
yeah, that's a
I'm looking at
that's.
ETHC. I'm also looking at SI.
See, you know more than I do. Now let me ask you a question here. I want to get live Bitcoin frigging chart so I can actually chart it on Thinkorswim. Does anyone know the symbol? I mean, it's not
No, I
BTC.
do. I do that on TradeView.
You do it on TradeView. Okay, because I
TradingView.
know it's here. I know it's here, but I don't know if they have a live. Oh, there we are. We got it. Slash BTC, Bitcoin futures. So
Oh,
let's
is it?
chart
Okay.
it right now. Yep, just slash
Okay.
BTC. Okay. I knew it was there, So let's
I
take a
didn't know
look
that.
at, yeah, so now we know. So we all learned something. So let's take a long-term picture of BTC. I bought my son BTC years ago. He's like,
Oh,
what?
nice.
Yeah, I know, really, right? I haven't. He doesn't say much about it. That means he's probably made like a lot of money on it, But
Wow.
okay. So God bless him, So let me see here, because he used to say, "Dad, it doesn't do anything," and it's like, okay, why don't you just sit on it and just add to it every week after I bought it. I just put a little bit of money every week, and it's on Coinbase, and it takes 2 seconds. So hopefully he did that because I want him to learn on his own. So I'm sure, but I know he has it. Okay, on the left. Okay, I don't think he sold any. Why should he? And it was all the way lower. It was like 7,000 at that time. So all
Wow.
right. So if we look at, yeah, this was a bunch of years ago. When was it? Yeah, like around here. Not that long ago. It was actually at. I remember it
Couple of
was
years back.
yeah, it was 3 4 years ago, 3 years ago at least. But it was actually at 7,000. It was 9,000. It was 5,000 just in April of 2020. Think
Right.
about it.
Yeah.
Look at this. This is a serious chart. So okay, if we do a Fibonacci retracement, we can see here that BTC can go to 65,802, and it hit the psychological round mark of 60,000 plus, or 61, just the other day. Right now, BTC is in a serious bull flag, believe it or not. However, internals are starting to somewhat weaken. And when internals weaken on an asset class like Bitcoin, it tends to have a higher rate of momentum on the speed of the fall and the speed of the rise, because so many people are involved in it 24/7. And there are outside unknown players who might be big whales, dropping a big from no one knows about it. So that's just keep that in mind. You get some serious swings. That's why BTC you know, is Bitcoin. So this one is starting to weaken. And if they continue to weaken, then obviously I would look at the same picture. 53,000, these are the futures, 53,000 on, where is BTC right now, the actual price? Let me just see here.
56 something.
Okay, so this one is indicating pretty much the actual price. Good, good. So if you notice, the 50-day moving average is 45,000. Okay, and the stock has literally taken off from the 50-day moving average. So I would say the standard deviation, or the movement away from the major 34 and the 50-day moving average, just the way we analyze stocks and indices, is pretty sharp. However, it seems to be coming, it's going to rest around 52,800 or 53,000, which is the uptrending 20-week moving average, or 20-day moving average right there. So it's actually quite easy to chart. However, this thing is weakening. That means longer term, maybe BTC wants to come a little bit closer to the 50,000 range, or maybe to the 45,000 range. At that point, the internals will be quite oversold. So if somebody's looking to trade Bitcoin, then they and looking to get put in a decent sum of money in it, they should be looking somewhere between 45 to 50, which are also psychological numbers, 60, 50, 40, to be what their entry points could be. But so far, internals, this weakening a little bit, no biggie. And also the MACD is not showing any signs of any major loss of momentum. Remember, Bitcoin moves on momentum a lot. Bitcoin moves higher or lower for a simple reason. Can somebody tell me why?
Supply and demand.
That's it. There's only 21 million Bitcoins or something like that out there, right? And you have to make these Bitcoin tokens all the time. That's why the miners stocks have been, so pretty hot. So, and they expire. Some of the Bitcoin also has a half-life. I don't want to get into that. You guys can, after a certain, every 4 years, they take down the old Bitcoins down. So all of a sudden, supply gets tighter. So lesser amount of Bitcoins to buy, prices go higher. That's pretty much what it is. There's no real fundamental value for Bitcoin. In other words, what's backing Bitcoin? Like I can't go out there and buy gasoline with Bitcoin. Okay, even though Bitcoin is being transacted in many places, it's basically exactly like Vic said. It's supply and demand. And if I'm right, there is like 21 million, not 21 billion. That's one thing I know. It's 21 million coins out there. So if everybody's chasing from grandma to grandpa to the delivery guy to the billionaires, sitting in San Francisco and New York, all want Bitcoin. Well, what do you think Bitcoin's going to do? It's going to go higher. All right. So that's pretty much it. So let's do. It's all supply and demand, pure supply and demand. Okay. So yeah, I would say so far it still looks good. I mean, this is still very much a bull flag. And the 161.8 extension, which is serious extension out, is 65,000, 65,802. But remember, it's a law of numbers. From 56 to 65, it's really not that much. From 10 to 60 is a 5-bagger. From 30 to 50, nice. 56, 57 to 65, it's like, so percentage-wise, it doesn't really give the money. So Ethereum is another great one. Let's see if that comes up. I hope this helped a little bit on what you were asking, Vic.
Yep,
Wow.
thank you.
Ether futures.
Look at
Wow. Look at this.
ETHE.
This is the one I like a lot, because this is used in financial transactions by financial companies in some cases, and the coding is quite different. Read up on this, because they also did something pretty revolutionary last week. I believe they changed their code or something, and this one I like a lot. Okay, so these are Ether futures, Ether they call it, and this is a beautiful cup and handle, and it doesn't cost 56,000. It's at 1,800, and here's your cup and handle, ladies and gentlemen. Absolutely beautiful. Look at that. There you go. I think it's going to do this.
Yeah, looks good.
Yeah, and if it comes down, at least you know what your bottom is. There's a neckline here at 1650. You got a major neckline here. It's a very defined range. Very defined range. Ether, ETH. Somebody else wants to look at something? I want to wrap up. Anyone? Okay.
XEL.
I'm sorry, which one, sir?
XEL.
Yes. Okay, let me check. Excel Energy. Now, keep in mind one thing about energy. Energy is run up a lot, okay? So energy is going to consolidate a bit. Oil will consolidate a bit. So this is directly tied in with oil, correct? Oil and gas? Yes? So looking at the
It's
longer
electrical
term,
utilities.
electrical utilities. Okay, so this is nothing to do with oil and gas. I don't know the company, that's why. I mean, I know the name, but
They're
I
my
don't.
local power provider.
I'm sorry, what?
They're my local power provider. They provide electricity.
Okay, okay. So this is a nice conservative stock. You know, this is what you're looking at. There's let me just draw this out for you. Nice. They pay a nice dividend.
Yes.
That's good. So here's your. It's very easy to chart this one actually. So here's a real trading range. The lower end of the thing, if you're looking at 57, upper end you're looking at 67, and best case scenario based on historical part from last November, you're looking at 76 with some. It's a pure range. It's not a trading stock. This is an investment. It's an investment, and it looks pretty good. It looks very good. It's an electrical company. They rely on keeping the customers happy, paying some nice dividends. So this is the way I would simply chart it. These lines would obviously have to be white, not red. So again, nice and steady, ranges of between $2 to $4. Not a day trading stock, as you very well know. You own this. Nice dividends. And let's see here. There we go. It's a good looking chart. Nice and steady. Nice conservative company. Yep, absolutely. Very good. I think it's a solid investment. Let's take a look at the weekly, what it looks like. That was a daily. Oh, weekly looks pretty damn good. Very nice. So this one I can play with a little bit more with drawing my little funky trend lines. Hold on. This was the COVID crash, obviously, back in March. This one I can play with a little bit. Yeah, with businesses picking up, they're going to generate more revenues. It's a good. Yeah, see this one I can actually draw some nice charts. Remember, these companies are all beneficiaries of a stronger economy, right? And the reopening play. So take this out, remove drawing. There we go. Now it's looking good. There you go. So here we got the 50-day moving average at 66. So you got, nice 3 points from here. And if things really work out, then you're looking at 73. Yeah, the weekly looks much, much better. Consistent buying since the beginning of March. You can see that right there. Look at the green. Look at the green bars. Some big institutions are buying, putting it away. And MACD hasn't even turned yet on the weekly. Good looking. Definitely a plus. Anyone else, please?
Hi, Frank.
Go ahead.
Yeah, will you recommend some stocks for the food industry? If
I
it's gonna go have higher inflation.
I don't know. I'll be honest with you. I mean, restaurant industry, yeah. I mean, you can look at Chipotle, which will still go higher. You can look at Domino's. Um, those are the things that I'd be looking at. Darden restaurant, okay. What's the symbol for Darden? DRI. Yep. Look at this chart. Okay. So Darden Restaurants is one. I mean, these things are just moving at breakneck speed. Look at that. This is the weekly chart showing you the bigger picture. Chipotle started to buckle a little bit, but still, trend is still higher. Let's look at the daily. It's starting to, Chipotle is a more volatile stock. So, but still, I still believe Chipotle goes higher. I mean, they're a big beneficiary of that. Domino's, let's see here. Domino's has a lot of potential to move higher. The high for Domino's was 435. This stock just about to break over its 50-day moving average at 368. Options move, stock moves. We have traded this before. This is definitely in my book a strong buy. Let's draw a downtrend line. Hold on one second. Anyone else know any good food companies? Here's your downtrend line. That's at 375. That's $10, $12 higher from here. So we got Domino's, we got Chipotle, Darden Restaurants. I know I'm missing one in my head. Shake Shack, another very good looking chart. This stock has a lot of potential, ladies and gentlemen. Okay, a lot of potential. Shake Shack. All right, let's remove all the drawings here. Shake Shack, this is the daily. This is creating, this stock is about to break out because they not only survived the debacle of COVID, they opened up more stores. Their business is going strong. Here, so what's the level here? Let's say 135. This is serious. Like every time it consolidates, you get the breakout. I still think Shake Shack is a $140 stock. This is a big pick. This is a strong pick. Okay, Shake Shack. Shake Shack is definitely. So you got name. So I got to do Darden Restaurants, which basically owns a lot of other franchises, a lot of different brands. You got Chipotle, which is very expensive. So, but still, it's still going higher. Shake Shack and Domino's Pizza. So those are 4 names I can give you. Okay.
Oh, Frank, could you look at the Caterpillar, DE, those,
The monsters. Okay. Caterpillar and stuff, these guys are going to slow down a little bit now for a simple reason. They went up a lot. From a valuation standpoint, they got overvalued. Okay. So I will show you Caterpillar on a shorter term basis here. See how it's pulling back a little bit? Okay. From, 1 second. From 236, the stock pulled up to 225. It's not a big deal. It's Caterpillar. But I would be more of an aggressive buyer of the stock, probably around 220, if not around 210. Looking at the internals, you can see that these stocks ran up a lot. Okay. And they got very overbought. So technically, they're very overbought. And that's why they're starting to slow down a little bit. So they're still tradable, no question about it. But like I said, short term, overvalued. Same thing with DE, John Deere. Okay, look at this. That's an inverted hammer from 392. The stock has lost 20 points. Not a big deal, but I would be a buyer of this stock more around 360 and more around 331. If you look at the internals on the daily, there have been consistent selling on the stock 2 days in a row. Well, that's because of the market. It is starting to buckle. It doesn't buckle all the way down here, but another 5, 10, 15 points, they become a pretty screaming buy. But I'm going to certainly keep them in the radar. These are great stocks to trade. But right now, short term, they're overvalued. But nothing crazy. Like I said, 363, that's only 9 points from here, right there for them. Okay. All right, guys, I got to wrap up. It is 10:31. We started the session at 9. Wow, already an hour and a half. Let's everything that I talked about, use your own gut feelings, use my suggestions. Let's stay calm. Don't have to rush in first thing in the morning, do this and that. Let's see how things develop. And I still believe that the QQQ, which I showed you on multiple different charts, which is holding on a short-term basis, is due for a nice sharp bounce. And that sharp bounce should be stopped. It'll hit a wall, but that's still a lot of money right at that gap fill, which is around 324, 325. That's pretty much it. That's, and then we'll see what happens after that, with interest rates and all that stuff, which are really the reason behind all this stuff. All right, have a great evening. Get some great referrals. Thank you for attending. God bless you all. let's go into Monday with being grateful to God for everything that He gives us, and also with a smile on our face, regardless of how volatile the markets can be. All right. So, and market and futures are behaving pretty well, so that's a good sign. And Nasdaq futures are up 60. We really do need the Nasdaq to stabilize, and it has been stabilizing for 2 days in a row. It has been higher than the Dow Jones Industrial Average in performance during the day. That's a good sign. That's telling us that the overall massive pressure of forced margin sellouts, which are millions, in some cases billions of dollars, are starting to abate or slow down. So that's a good sign. So let's go with it. All right. Good night, all. Thank you.
Thank you, Frank. Good night.
Thank you. You too, Sue.
Thanks, Frank.